Hey guys, welcome back to the channel. Today I want to talk about something crucial, how to legally pay less taxes and keep more of your hard-earned money. Whether you're a trader, a businessman, or just someone trying to build wealth, taxes can feel like a huge burden. But what if I told you there are legal strategies to keep more of that money? And no, I'm not talking about anything illegal. This is all about using the tax laws to your advantage. Before we dive in, I have to give you this quick disclaimer. I'm not a tax professional, and the advice I share today is based on my own experiences and what has worked for me. Always consult with a certified tax advisor or accountant for personalized advice. All right, now let's get into it. When I first started out as a real estate agent, I had no idea how to run a business, let alone think about taxes. I didn't know the difference between an LLC, an S-corp, or a sole proprietorship, but as I started making more money, I realized how important it was to structure my business in a way that minimized my tax liability. I remember spending hours researching online, trying to understand the nuances of each business structure. It was overwhelming, to say the least. There's so much jargon and technical language, it's easy to get lost in the weeds, but I knew I had to figure it out. I didn't want to throw away hard-earned money on unnecessary taxes. That's when I decided to invest in a good CPA. I figured it was better to pay a professional to guide me than to try to navigate the complexities of the tax code on my own. And let me tell you, it was one of the best decisions I ever made. My CPA helped me understand the pros and cons of each business structure and which one would be most beneficial for my situation. He explained that, as a sole proprietor, I'd be taxed on all of my business income on my personal tax return, but if I formed an S-corp, I could potentially reduce my self-employment tax burden. This was huge for me because as my income grew, so did my self-employment taxes. So I took the plunge and formed an S-corp. And just like that, I was able to pay myself a salary and take the remaining profits as dividends. This simple change in my business structure saved me thousands of dollars in taxes. It's not about cheating the system, it's about understanding how the system works and using it to your advantage. And the best part is, it's all completely legal. The government wants you to start businesses, create jobs, and contribute to the economy. So, if you're serious about building wealth and keeping more of your hard-earned money, you need to start thinking like a business owner. Take the time to understand the different business structures and how they can impact your tax liability. Trust me, it's worth the effort. The right business structure can save you thousands of dollars in taxes and put you on the fast track to financial freedom. Now let's talk about deductions. This is where things get really interesting. I'll be the first to admit, when I first started out, I didn't pay much attention to deductions. I figured, hey, a deduction is a deduction, right? Wrong. I was leaving money on the table and I didn't even know it. But once I started educating myself about what qualifies as a business expense, it completely changed my approach to taxes. Suddenly I started seeing deductions everywhere. Everything from my office space to my car mileage to even my phone bill could be written off as a business expense. It was like a whole new world of tax savings opened up to me. Now, I'm not saying you should go out there and start making up expenses. That's called tax fraud. And it's definitely not something I recommend. But what I am saying is that you need to be meticulous about tracking your business expenses. Keep receipts for everything. And I mean everything. You never know when you might need to justify an expense to the IRS. I even have a separate credit card that I use exclusively for business expenses, just to make tracking everything easier. Some deductions are more valuable than others, and it's important to understand the difference. For example, a deduction for a business expense, like office supplies, will reduce your taxable income dollar for dollar. But a deduction for a capital expense, like a new computer, will be spread out over the useful life of the asset through depreciation. The more you know about deductions, the more money you can keep in your pocket. So, don't be afraid to take advantage of the deductions that are available to you. Alright, let's talk about retirement accounts. Now I know what you're thinking. Retirement? That's like a million years away. I'm young, I'm invincible, I don't need to worry about retirement right now. Trust me, I get it. I used to think the same thing. But let me tell you, the sooner you start taking advantage of tax-deferred retirement accounts, the better off you'll be in the long run. See, retirement accounts are like a secret weapon in the fight against taxes. They allow you to grow your money tax-free, year after year. It's like having a superpower that the IRS can't touch. I'm talking about accounts like traditional IRAs, Roth IRAs, 401ks, and if you qualify, SEP IRAs. These accounts are designed to help you save for retirement, and they come with some pretty sweet tax advantages. With a traditional IRA or 401k, you contribute pre-tax dollars, which means you get a tax deduction up front. That's right, you can actually reduce your taxable income today by contributing to your retirement account. Now with a Roth IRA, you contribute after-tax dollars, but here's the kicker. Your money grows tax-free, and you don't pay any taxes when you withdraw it in retirement. It's like a free pass from the IRS. Plus, the tax savings are immediate. It's like getting a little bonus every year that you're investing in yourself. And the best part is, the longer you let your money grow tax-deferred, the more you'll benefit from the power of compound interest. So, even if retirement seems like a lifetime away, don't wait to start saving. The sooner you start, the more time your money has to grow tax-free. Trust me, your future self will thank you for it. Alright, now let's talk about real estate. And trust me, this is where things get really exciting. You see, real estate has been one of the biggest wealth-building tools in my life. And a big part of that is because of the amazing tax advantages that come with it. I remember when I first started learning about depreciation, it almost felt like a cheat code, a way to legally reduce my taxable income without actually losing any money. You see, depreciation is this beautiful concept where the government allows you to write off a portion of your property's value every single year. It's like they're acknowledging that your property is slowly wearing down over time, even if it's actually going up in value. So imagine this, you buy a rental property for, say, $500,000. Now let's say you're able to depreciate that property over 27.5 years. That means you get to deduct about $18,000 from your taxable income every single year for the next 27.5 years. Now here's the best part. That $18,000 deduction reduces your taxable income, which means you pay less in taxes. But here's the real kicker. You're not actually losing that $18,000 every year. Your property is still there, it's still generating rental income, and it's likely even appreciating in value. But in the eyes of the IRS, you're able to reduce your taxable income because of this magical thing called depreciation. So if you're serious about building wealth, you need to get serious about real estate. So there you have it, my friends, 4 powerful strategies that have helped me legally pay less in taxes and keep more of my hard-earned money. Remember, understanding how to use the tax code to your advantage is crucial for building wealth. Now I want you to take this knowledge and apply it to your own financial journey. Start thinking like a business owner. Take advantage of those tax strategies and watch your wealth grow. Before you go, I'd love to hear your thoughts in the comments. What's the most surprising thing you've learned about taxes today? Also, don't forget to hit that button if you found this video helpful. And for more tips on wealth building strategies. Thanks for watching, and I'll see you in the next one.